Hello there. In this quick video, I will demystify the concept of contribution margin, also simply called contribution. Let's imagine I have a kiosk in the center of my town and I sell soft drinks for $1.10 a bottle. I know it's not environmentally friendly with the single-use plastic. I know it's not the healthiest thing to be pushing the sugary drinks, but just work with me. It's a simple example. I understand the cost behavior of my business, and I have figured out that I have a variable cost per unit of 50 cents, so that would be half of a dollar, and fixed costs of $75 per month. To recap what that means, if I look at my units sold and my cost, if I look at my fixed costs, that's rent, okay? No matter how many bottles I sell, even if I sell 0 bottles, I've got to pay the rent. So the rent cost does not have any relationship to the units. It's a fixed cost. It's flat in my chart. My variable costs, on the other hand, these costs increase in direct relation to the number of units that I sell. So in my simple example, let's just imagine the 50 cents, that's the price that I pay at my supplier. So if I sold 1 drink, my variable cost would be 50 cents. If I sold 2 drinks, my variable cost would be $1, right? 50 cents per unit. So that's a recap of variable and fixed costs. Let's bring the discussion back to contribution now. I know my selling price. That's $1.10. I know my variable cost per unit. That's 50 cents. The difference there, what's left over, is 60 cents, $0.6. Guys, this is the idea of contribution margin. It's the selling price minus the variable cost. So think about it this way. I sell 1 unit. In order to make that sale, I had to spend 50 cents. So now what's left over? Contribution. I'm giving. That's the contribution to the fixed costs, and if I cover my fixed costs, it's then contribution to profit. Let's now look at total contribution, and to do that, we'll imagine we sell 200 drinks in the month, so we can make a P&L for the month. So we need to look at our total sales, and that would be the units times the price, so that would be $220. Our total variable cost would be 200 times 50 cents, or $100. The difference there would be the total contribution earned. I'm just going to abbreviate that, total contribution. So guys, that looks like $120. So that's how much we have left over after we pay our variable costs. So we need to contribute to our fixed costs. Our total fixed costs we see are $75. So the contribution, the total contribution, exceeded our total fixed costs, so we have a profit of $45 if my mental math is correct. So that's the idea of total contribution. It's essentially the same thing as contribution per unit, but we're applying it to a period. So in this month, we earned a total contribution of $120, and we more than covered our fixed costs, so the remaining contribution comes into my pocket as profit. Ladies and gents, that is what contribution is all about.